Do you feel as though you can still be bullish given what we've seen in markets over the course of the past week?
Hi, Dom. Good morning to you. Yes, I still do. And I think, the markets, investors are pretty optimistic. We're seeing positive news across the board. Vaccine rollout is getting better. We're seeing optimism with our getting back to normal with, indoor dining, especially in New York, coming back to fruition now. And there's a lot of things that investors are optimistic about. But the tech-enabled companies and the big cap and growth companies are still performing strong, and we're still seeing that performance across the board, as you mentioned earlier in the show.
All right, so if we take a look at the way that markets are shaping up right now, so far this year and so far for the last few months, we've seen what I would call the kind of COVID recovery trade, right? The energy sector is going gangbusters right now. Fuel prices are on the rise. People are expecting people to travel more, that sort of thing. Meanwhile, you've got defensive sectors, consumer staples companies. They're some of the worst performers out there. Does that trend continue? Do we see a rotation kind of back into this idea that things get back to normal?
Yeah, we've talked about it. I think you see some of that. So we're hedging when it comes to having that going back to normal play, especially with travel and leisure. But I still think the tech-enabled story and some of the big growth story will still continue because that, as you mentioned with Salesforce, that's still going to that story and that trend work from anywhere. It's still going to happen. So I think you still see a mix of both. So you want to make sure you're well diversified in that situation.
How exactly then do you diversify yourself in this kind of environment? What exactly are you putting on the shopping list for your clients as a financial advisor?
So that's a great question. So when it comes to the stay-at-home play, we're still in the companies that we believe in the story that passed just this pandemic that we're going through. So we're in the stories that we believe are going to continue to perform well when it comes to well positioned as far as management to make sure that their company is performing well past this. So you obviously mentioned some of the big firms, whether it's CRM and some of the firms that are well positioned. Zoom, I still believe, is a company that's going to be well positioned past this. But you also want to have exposure to the other areas. So if you're not well positioned there, you want to make sure you play in a diversified play, but it's an ETF that's covering those grounds.
Okay, so then are there things right now that worry you? Are there things right now, besides the fact that the virus could flare up again in a certain way, that there are new variants out there? What exactly then would derail things that are going right now in the market?
That's a great question. I would think a couple things. I would think one, continued speculation. You want to make sure if you're someone that's more trading and speculating that you're well positioned, you're covered in that situation. That would be one of the bigger worries if the speculation continues. There's more frenzy where things are just not able to be really patterned out, and that would be the biggest worry. There's a lot of optimism, but I think a lot of it is well deserved. But if we're seeing a lot more speculation, that would be something that would probably bring more worry.
There have been a lot of new trends developing right now, at least in the near to medium term, with regard to asset classes some financial advisors and investors would consider alternative. I think of things like cannabis. I think of things like cryptocurrency. I think of these short squeeze type stocks that have been so volatile as of late. Have you changed any of your asset allocations for clients to even take any small exposure to any of these kind of emerging, if you will, type asset classes?
Yeah, great question, Dom. And we have. And we're waiting for some of the institutions and our custodian to allow advisors to hopefully custody that for clients. But yes, and clients are calling me and asking a lot more about cryptocurrency. And that's something that a lot of people have been super interested in, especially the younger clients wanting to understand what's going on. There's so many trends in that area that are super interesting. And we are telling clients, yes, you should have exposure to cryptocurrency based on your research and based on understanding it, and make sure that it's up to for your risk tolerance, because you mentioned it's something that's going to be very volatile going forward. So if your risk tolerance isn't up to par for that, you want to make sure your exposure is a lot lower and you first understand the assets of the digital currency. But yes, we want clients to be exposed to it because we understand it's a digital store value. It's something that's going to have a lot more use cases and going to have more adoption going forward. You're seeing bigger institutions starting to warm up to it. So that's something that we are saying the client should have exposure to.
Shepard Smith here. Thanks for watching CNBC on YouTube.